Great new day traders, and you're watching the Daily Market Review with me, financial analyst of Grand Capital Company, Sergey Lin. And as traditional, our daily heading is dedicated to the technical analysis of some forex major pairs. And our forex major pair will be first is intraday analysis of euro and US dollar. So lowers of resistance between Monday's high at 1.5957 and the Ichimoku cloud resistance on the weekly chart at 1.4084 are expected to restrict the corrective euro rally, and daily momentum is beginning to turn bearish, suggesting there is no significant underlying support for these fresh 6-week highs. A setback below 1.3822 would expose 1.3776, although only below there would concern euro bulls, and the weekly chart of euro and US dollar trend is bullish. The next pair, intraday analysis of US dollar versus Japanese yen. So, solid resistance at 76.60 leaves Friday's all-time low at 75.78 vulnerable, and Friday's weakness completed a bearish symmetrical triangle pattern on the daily chart, and a push below Monday's 75.88 low would expose the 75.78 low. Broader downside risk has been created for 74.25, derived from the completed triangle. A recovery above 76.24 would provide temporary respite, but corrective US dollar gains are limited to 76.60, and the weekly chart of US dollar trend and Japanese yen trend is bearish. This next analysis of pair intraday analysis of Great Britain pound versus US dollar. So Monday's 1.6006 high is one on the verge of breaking, as the Great Britain pound bulls remain on course for 1.67. This target is derived from the recently completed ascending triangle pattern, although upside risk has room for 1.6115 and 1.6211 on concerted strength. Corrective weakness is limited to the 1.5850 area, and the weekly chart of Great Britain pound versus US dollar trend is bullish. Intraday US dollar and Swiss franc analysis. More weakness towards 0.8645 is expected following last week's push and close below 0.8881. Fresh 5-week lows are being set, leaving the October 20th lower high at 0.9082 stranded and exposing the downwave equality target at 0.8645, and this target ties in with the previous higher reaction low, also at 0.8645, and only a clean break above projected resistance at 0.9919 would question the US dollar bearish outlook, and the weekly chart of US dollar and Swiss franc trend is bearish. The last intraday analysis of Australian dollar and US dollar pair. Completion of a ball pennant creates upside scope to 1.057 T. This 1.0570 target is now within striking distance and is the last line of defense protecting the key 1.0666 and 1.0683 resistance area. Solid support lies in the 1.0355 and between 65 area, and on the sustained break below there would concern Australian dollar bulls, and the weekly chart of Australian dollar versus US dollar trend is bullish. Okay, let's finish with forex major pairs and turn our regard to fund areas. What I have here, Stocks 50 has fallen for about 0.50%, FTSE 100 has raised for about 0.1%, DAX has also fallen for about 0.14%, Energy Brent has fallen for about 0.21%, VTI has raised for about 1%. Industrial metals, Copper futures has has raised for about 0.42%, and precious metals, they are all raised, and gold raised for about 0.36%, and silver has raised for about 0.48%. Thank you for your attention, dear traders. For additional information, you can visit our website www.grandcapital.net. It was me with you, financial analyst of Grand Capital Company, Sergey Lin. Thank you for your attention, good luck, and I wish you the fair trend.